esteemed panelists. Most of us are living in a bubble, in a fund bubble. You're all in the crypto bubble, so we try to match bubbles today. Having said this, I think it's worth that each of you will quickly introduce yourself and which company you work for and what the company is doing, because I believe not everybody is aware, maybe union investment funds, personal investment, but everybody else might be quite a specialist. I think that helps to evaluate where the answers come from.
Thank you, Tim, for having me here. I'm Christoph Hock. I'm heading tokenization and digital asset efforts at Union Investment. We are here, Germany, a Frankfurt-based asset manager. Focus on blockchain, we have about literally 10 years ago, and this topic intensified somewhere 2019, 2020. We've had the first use cases we implemented on the investment side. This was back in 21, 22. And now we see really a great acceleration, Tim, of this entire topic. Is it, on the one hand, looking at us as an investor, investing in tokenized products, and also looking at our role as an issuer, so issuer of our own fund shares, and blockchain key topic as a part of our digitalization strategy at Union.
Thank you, Christoph.
Yeah, thanks a lot. Thanks, Tim, for having me. So my name is Michael Spitz. I'm the co-founder and co-CEO of 360X. We're a trading venue owned by Deutsche Börse and Commerzbank for tokenized securities. And yeah, that's pretty much it.
Yeah, I'm Michael Duttlinger, CEO and co-founder of Cashlink. We're the leading tokenization provider in Germany. We have processed the most tokenizations in Germany. As infrastructure provider, we hold a license as a crypto securities registrar and a crypto custodian. And our clients range from big financial institutions like KfW up to also small companies that are tokenizing alternative assets, and we're based in Frankfurt.
Yeah, warm welcome from my side. My name is Volker Braunberger. I'm co-founder and CEO from FUNDSONCHAIN. We are not a legal authorized company. We are just providing IT platform for financial institutions to enable them to handle digital assets end to end from a workflow perspective. We started 3.5 years ago, our journey, and our primary focus is definitely on the investment management industry, where we bring decades of experience from the business side into our platform.
Yeah, my name is Dolf Diederichsen. I'm the CEO and co-founder of Hyphe. At Hyphe, we are a regulated securities trading firm, so fully MiFID licensed, but we do primarily trade cryptocurrencies only at this point with banks and brokers. So usually our clients have a security trading offering and they want to add crypto to this, which we are happy to then provide and help. But we also can trade securities, and that's sort of, for us, I think, the next big step that we want to venture into. So I think it's the perfect panel.
Right, thank you very much. So maybe to make it clear, because we are all aware of the fact that we have different layers of investment. I think that's a very essential understanding. Top level we are thinking about is the investment fund level, so the regulated layer, and the really regulated investment fund we are thinking about, not the Bahamas, whatever funds. Talking about German funds, maybe more precisely, and then we have the asset sphere, traditional assets, non-traditional assets, whatever this means, and cryptocurrency, more specific on the more non-traditional side. So this is the two-layer perspective everybody should know about. Topic of the panel is the tokenized securities and funds. That means the two-layer approach. Generally, we heard about Christoph and Union Investments endeavor in the space. What's your overall perception? Where are we currently in the different spheres? And what's the end game? Where could we be at the end? So from 1 to 10, how far are we? And what's your experience? What's happening in the sphere of the tokenization of the capital market in general? Open question, whoever feels competent.
Before Christoph answers. So I think we are throughout the journey at the moment, still not there. But for me, the most important part even in 2040 or 2050, we're still going to have OTC trades in paper-based. We're still going to have things like what we call electronic trading, because people will not have a wallet in 2050. Be clear, there will be still people who will not have a wallet. But we will have increasingly, and this is what we're all building on, also, of course, digital securities where you need a different infrastructure. I think we still need the trigger point, what is really changing. And something from the crypto side is actually accelerating it, which is good. But I think ultimately, once we get to a real solution on the payment side, where there's an alternative, where we have one system that's purely driven on, let's call it, target system by Bundesbank, the rails, and the other one by Cascade, by a CSD. If you start combining this, so either you allow Bundesbank to run all security settlement, or you allow someone like Cascade or Clearstream or Euroclear to run all of payments, I think then you're really going to have the inflection point. But what will really happen relatively quickly, whether it's the wholesale CBDC, whether it's stablecoin conversation and so on, people will use less fiat. And that means you will have intraday returns, meaning no longer a day count fraction of actual or 3360, but actually in seconds, when you can have a certain amount of availability. And the total amount of available cash, whether you call it M1, M2, will actually reduce massively. So that's my prediction how capital markets will happen. And the rest is just a little bit of fiddling around.
All right, so I'm explaining one aspect, the payment side. On the asset side, what's your prediction? Or where are we? It's actually not the prediction, but where are we currently?
Just two sentences. So everyone has been driven by regulation. So for us, for instance, on the asset side, we're allowed to trade funds, equities, rates, credit, private markets, and money market funds. We're not allowed to trade complex embedded derivatives. That's the thing where BaFin said to us, and ESMA said, oh, please come back with a new application if you really want this. But is there really use cases? We're seeing increasingly the big demand last year, as explained by Michael, the typical issues like your KfW, your Siemens and so on, they're just utilizing a new infrastructure to use the old product. So we haven't seen product innovation as such, and I don't call that T+2 to T+1 because you can do that with a normal, without DLT.
Great, thanks.
So also happy to jump in. Where will we be in 5-10 years plus? Point number one, we will have 24/7 trading. So at the moment, we typically have during the day, starting at 9, finishing at 5:30 for traditional assets, at least here in Europe, exchange opening hours. I think this will be passed. So 24/7 trading as we know it today from the from the native crypto asset space will be the kind of new normal. Point number one. Point number two, we will not have physical global documents as a format of securitization anymore. Going forward, token will be the new normal, and blockchain technology will play a key role in this context. And Michael, he was also referring to the settlement cycle. Here in continental Europe, we will switch to T1 in November 27, and in 5 to 10 years time, the new normal will be T0, so day 0, or if not, second 0. So that's the long journey where we are currently on, and the big topic is digitalization, obviously. So AI will reshape the financial industry over the next couple of years, and blockchain technology will also be a key driver. Guess what's important to mention? It's not technology for the sake of technology. So as an asset manager and as a financial industry, we are a service industry, meaning we have clients behind. And it's really about how in the future to serve clients in a very best way. And technology is an enabler, but technology is not the self-fulfilling prophecy to achieve this goal.
Yeah, and maybe looking back, we are in this tokenization space since 2018. And I was holding a speech here 2018. Everyone was looking at me. as I'm like some alien. And I always say my pitch hasn't changed. So we're basically doing the same as we're doing 2018. But what has changed is adoption. So when we started in 2018, it began with retail. It began with a very clear value chain of an alternative asset, real estate, solar parks, wind parks, and retail buying it. And this value chain was on the one sense very easy. And there was us and there was liability umbrellas. And then I mean, more than 30,000 retail investors bought tokenized products, and some of them didn't even realize. Of course, it was displayed it's tokenized, but they didn't realize they were buying tokenized products for the sake of technology. They just bought the assets in a more efficient way. And I think what then happens is we moved on from a really specific use case to other specific use cases, and this is what we will see the next years. So then the regulation came and really was a total game changer, because then tokenization providers like us got regulated, the custodians got regulated, and we had the electronic securities law in Germany. Then all the big financial institutions start experimenting. We had the ECB trials, which also a big push for adoption, and we saw a lot of POCs in different spaces. And what we're now seeing is very specific, specific use cases for a specific product with a specific investor and a specific issuer, and then we will move from really specific use case to another specific use case. And this is how we think see the adoption will take place. Because it's still complicated. I talked with one big asset manager from Frankfurt, and the asset manager told me, if I want to do tokenization, I have to convince 7 external providers to switch their infrastructure. This is complex. It's a new capital markets infrastructure, and that's why we have to pick the value chains where we have to change less players. And that's why, yeah, we need players like 360X from trading venue. We need custodians, we need us, we need issuers, we need investors. And what we are seeing, what is a very potential use case, will also be retail structured product certificates, because here you have a clear value chain, which you can then transform into a DLT-based value chain.
Yeah, maybe let me just quickly pick up on this, Michael, because you've been in the space for a long time, and you say 2018. We meet here every year, and we say there's great potential, and it's just coming. But if you, I think, look at the state of affairs, it's a bit disappointing, quite frankly, to see how long things take and how difficult it is for a technology that provides a lot of benefits, and I think really has the potential to improve settlement cycles and really sort of raise the efficiency generally, to see that it has so little impact yet. And I think that's everybody who's sort of trying to change really puts a lot of effort into it and struggles. So there's, I think it's not the individuals, but it's really, if you look from the outside in and just take a view sort of where you look only after like a couple of months or years, you then see that the actual rate of change is still too slow. And I think that's the question also, how we can further improve this, and that will be interesting to see if this rate of change changes.
If I'm not really sure.
May I jump in, because that's exactly my argument, because I think that if you look to 2018, we saw a lot of statistics that foresee billions of tokenized assets now in 2025. I think there were some McKinsey reports. Now McKinsey said in 2030 we will have trillions of assets tokenized. But by now I always compare it a bit with a picture of a ketchup bottle. It's still dropping. The big wave is still, we are all waiting on that. And your question is correct. Why is it the case? And we, just from IT solution provider, we are talking with the buy and the sell side at the same time. One aspect is surely that there's a bit chicken egg problem. One are saying, okay, there is no offering from service providers. Others say, okay, there is no demand from our customers to tokenize something. And the core question is, why is there potentially no demand? Because as I also would agree with you, there are very interesting use cases. But which of them do have a business case? That's exactly the question. And what is a business case? A business case is the cost saving aspect, or the increasing of efficiency. T+1, T+0 could be a push factor. Digital euro could be one. But finally, it's not, from my perspective, an automatically increasing of tokenizing assets. 2 years ago, everybody said, okay, we do miss secondary markets. Therefore, we cannot do something. Now, 21X, 360X, they're coming up. We have it. potentially next year we will have a digital euro. We'll see if we then see the catch-up wave. But finally, and from my perspective, the third argument why it's a bit slow is you have to separate the different markets. We are acting not only in Germany, we are acting in Luxembourg, in France, Italy. There are different, even if we are in the European Union, we have very different market setups. And here in Germany, we have a CSD market, which is very efficient. Even if everybody's bashing Clearstream, finally it works. It's a real big comfort zone. It's quite easy, it's quite digital, it's quite cheap. So and to press there the citrus fruits is still more if you pay, I would say, 0.0.0 basis points for a transaction or for any asset holding. It's quite hard even if you use blockchain. In Luxembourg we have a different case. There's a transfer agency case. There you pay for a security transaction 8, 10, 11 euro. That's really a case for blockchain. And that's why perhaps here in Germany, from my perspective, the precondition regarding the current market setup is quite efficient. That makes it hard for digitalization to really come not only with use cases, but also with business cases. In other countries, it's a bit different. But overall, if I could make a wish, the harmonization of legal requirements are still missing. We have here license requirements in Germany we do not have anywhere else. And it's also something what's really irritating market players, our customers, that means financial institutions, how and where to start with.
Volker, Dolf, I would agree with you that we really have to speed up to get it done. I would disagree that we have a slow adoption because I guess it's kind of normal when looking at all the technology innovation we've had over the last 3-4 decades. Look at the internet. It took 5 to 10 years for the internet to really reach the breadth of users. And first, when the internet was kicking in, acceptance was very low and skepticism was very high. And you've had a very slow curve of adoption, and then out of a sudden you went into the hockey stick, into the exponential growth. Similar, looking at Web 2.0, platform technology, Amazon, social media, 2002, it took also 5 years plus to really reach the breadth of users. And it's similar, I guess, looking at Web 3.0, at blockchain technology, at tokenization in our industry. I guess what we have to admit, we have a fully functioning industry as of now, and financial stability is really key, and that's why when technology innovation is kicking in, I think it's kind of normal that it's not adopted within 1 or 2 years time, and out of a sudden everyone is coming with triple billion euro investments, jumping onto this bandwagon to get it done. And I think what has changed compared to the last year, now we have all the missing ingredients sorting out. So looking at the payment mechanism, we have MiCA, which kicked in beginning of this year. We will have first stablecoins are already licensed under MiCA. We will see more to come. 3 weeks ago, we've had from the ECB the clear statement that in a 2-stage process, wholesale central bank money will be implemented. So the precise timeline will come in a couple of weeks' time. Then we make also progress on tokenized bank money, tokenized bank deposits, where I guess in the next weeks announcements might come out. So that's looking at the payment side. Looking at the asset side, I think traditional assets, now we know how the issuance process is working. We've seen under the exploratory phase of the ECB more than 45 use cases in total with KfW and Siemens flagship issuances in the bond space, where some of you guys were also involved. I'm looking to Michael here, to Cashlink. Next stage is we need trading facilities, secondary market trading. You mentioned 21X is there. They got the license. They are not live yet. We are also in discussions with 360X about getting tokenized bonds traded in the OTC market. So that's also a next step, having secondary market trading on these kind of platforms. And then to get an equal level playing field, we also need ECB eligibility, looking at the repo market for these type of products, also a missing element. And I think we are now in the process of coming to a kind of ChatGPT moment for tokenization this year. And we are somewhere at the tipping point, going from a slow, steady growth into an exponential curve. And last point I would like to make, looking at the Americans for the last year under the Biden regime and under Gensler as SEC head, they were definitely in a sleeping mode, literally doing nothing in the crypto space, doing nothing in the digital asset space. They've had prohibitive laws like SEP 121, which made it for custodians of digital assets really impossible due to high capital cost to offer the service. This will be passed, and with the US now on a full speed, we will also get it done pretty soon here in Europe to come to a digital capital markets union with assets and cash on chain as the key drivers.
Yeah, I totally agree with you, Christoph, and I think we are on the right track of adoption, and there is a lot of things you don't see out there. And adding to what Christoph has said, what we are also seeing now is, besides trading venues and stable coins and regulation, is the integration of crypto securities like us into custodian banks. So all the custodian banks are now building rails that they can not only distribute securities from CSDs, that they also can distribute securities from crypto securities registrars. And so we're getting integrated in a traditional world, and this will open up way more investors for the issuers of companies like us.
Yeah, just a quick, I totally agree. And if I wouldn't be convinced about that, I wouldn't be sitting here. I think the primary question was, where do we stand by now? And I think there was the expectations that we are a bit faster than we are by now. We do adoption, that's for sure. And my key takeaway, at least from the last 1.5 years, is that we have definitely found the right products. And I would say that the comparison with internet and so on and so forth, I hear that several times, but it's not totally correct, because this was a totally new product. And we are talking here about the handling, servicing and issuing of existing products in a new way. That means, and there I'm not really convinced that not for every investment product, blockchain will be the right one, potentially, because there must be a business case. That's at least my key takeaway from the last 1.5 years. And if there is no business case for an asset servicer, or even for asset manager, if you, Christoph, if you invest cannot buy your funds much easier, faster, more digital, cheaper to your clients, why should you use blockchain? Makes no sense. You will not convince your management board to do it, besides perhaps some test transactions. And the same for any custodians. If they cannot provide their services cheaper, more efficient, or in even another way, more innovative, they will not do it, because there is no demand. That's more or less the challenge that we all have as providers, as registered ones, as IT providers, to find to sell not only a platform. We have to do storytelling. We have to really come up with a vision and with concrete use cases which are underlined and based by a business case. That's my mission, and I think this could increase the adoption.
Yeah, I fully agree with you. And I think for us as a company, we're obviously looking at the space for a long time, especially since we have the licensing in place. But for us, it's like our banking clients who offer crypto trading through us, they can trade securities already. They have the full access to all of the securities that you can trade traditionally. And our crypto clients, they don't have the licensing. But there the issue is not tech, but the issue is that they still are in the process of getting the MiCA license or have it already, and now think about then MiFID as a next step. But it's also not a technological question. So I think the key question is, what problem are we trying to solve? And I think there is if I look at also the business problems that we have on a daily basis, then I think access to stocks in Europe, or access to even US stocks, that's sort of solved. That's possible. But if you then look sort of around, basically it's a global world. If you want to buy South African stock or Japanese stocks, that's pretty hard nowadays still. So I think there is potential in that regard. We see issues on the cash settlement. That's still, we settle millions of crypto trades a day, and for us, moving fiat is the much harder part than moving tokens. I mean, the Bitcoin transfer, we know either we still have the Bitcoin or we sent them, or they already arrived. That's pretty clear, and we know it at all stages. But for all of the banking clients that we have specific banking routes that we use. So we use our bank here to transfer to that bank there to make sure that we have the quickest path possible and the quickest transfer times. So it's not so much from our point of view about whether we do T+0, T+1, or T+2, but the question is how quickly can we, when we start settling, complete the settlements. And that also on the security side, in many cases, it's not the hardest problem, but on the cash side, it's huge.
Thanks. So let me try to sum it up somehow. So if my first takeaway would be current markets are not terribly inefficient. I think that's a good answer, but that makes it tougher to drive the whole market towards more innovation. As an asset manager, of course, you need to be more efficient or most efficient, especially you want to provide the best performance for your investors. I think it's more on a really, looking at the very specific cases, you gain more efficiency, maybe compared to your competitors. That's also an aspect, like every market participant. And on the other hand, as you said, settlement, also outside the European sphere, it would be an issue as well. We have one other specific topic, that's the liquidity. Maybe for the audience, what does liquidity in this context actually mean? So basic understanding, and why is it so crucial for the market?
May I just quickly answer this because we're a liquidity provider, and that sort of question hits home. I think the form how you trade a security, whether it's tokenized or traditional, that has no impact on liquidity. So the thing is like whether there's a market for it is completely independent of how you settle. And what we see in many cases on the tokenized side is that you have limited liquidity. And we regularly download the list of tokenized securities that are currently on the BaFin homepage. And we then discuss those with our clients. And there's, in most cases, very limited interest to then do secondary trading in these products with our clients. And so our clients ask us, so why should we do that now, given that the products are not there? And that's why I think products are the key thing, and you need to have liquid products. And that's the question, like how can you find liquid products that you then bring on chain and that you then trade in that context?
From my perspective, we see already first transactions in Luxembourg for the tokenization of UCITS funds. Yeah, UCITS fund is per se a liquid product, definitely. So that's exactly what you say, and therefore I would totally underline that or emphasize that it depends on the product that has been tokenized, if there's liquidity or not. And for UCITS funds, for instance, could be a very good aspect to bring it then on a secondary digital distribution platform like 21X, 360X, and so on and so forth. And that provides then still more, I would say, digital distribution channels, more liquidity in a product which is already liquid per definition. That's the case. The transactions you mentioning are more, that was, I would say, club deals, yeah, that for buy and hold strategy to make first good steps into this market. But there was, from my perspective, never ever the idea to have a liquid, high liquid level there. Yeah, but Michael, sorry, I want to.
Yeah, maybe as you said, Volker, before, we need to look at specific use cases with specific business cases. And the business case from our side is either you have efficiency gains, cost cutting, or other efficiency gains, or the short-term business case is you open up a new investor classes. For the new investor classes, we see a lot of crypto native brokers where you have only crypto. And all these crypto native brokers are now saying, okay, we also want to offer traditional securities, but they don't want to integrate the old traditional infrastructure into their crypto offering. They want to have a tokenized DLT-based infrastructure. And that's why, for example, you see money market funds, a huge rise of money market funds, because people who are only in crypto at a crypto broker want to easily switch into a money market fund. And that's, of course, in a tokenized way, because it's easier to switch from a tokenized product into another tokenized product, and it's all on a DLT-based capital markets. So there you have a specific use case for someone to tokenize a money market fund, because you reach a lot of more investors, and this increases your assets under management. So a specific use case, but actually even if you have no efficiency gains, it's a good use case. And if you have this use case, you of course need liquidity, because if it's not liquid, it's useless. And that's why you need providers like 360X or 21X that then can provide the liquidity in for a tokenized product. And that's why it's a very important piece. But from my perspective, the big, on the highest level, it's either cost cutting or it's new investor classes, and in both cases you need the liquidity for most of the products.
Maybe Chris, you can also add what liquidity means for an investment fund, and pardon, but what actually money market funds are and what's their role is in the market. I think that also helps to understand the current situation.
Yeah, maybe first to start to define what liquidity is. Everyone's talking about liquidity. You ask 5 guys, you get 6 different answers. So liquidity from the asset manager's perspective is on the one hand bid offer spread of a certain instrument, and which type of market depth do you have. So how many players do you have in the market providing these bid offer spread. And looking from a cost perspective, and that's obviously for us the important outcome. So when grabbing liquidity from a trading platform, which costs are implied with this transaction, we have two types of cost. We have explicit cost. These are typically the fees charged by exchanges, by platform providers, and by broker firms. And you have the so-called implicit cost. Implicit cost is defined by market impact. And therefore, when looking at innovation through blockchain technology in the tokenized world, it's on the one hand important for us to look at the trading platforms. At the moment, I guess the entire financial industry is characterized by having pretty much central structures, and that's regardless whether you look at the CSD, the central depository. That's regardless whether you look at trading venues. We have pretty much oligopolistic structures, and oligopolies typically come in with high cost for the investors, and innovation is not really the top priority. And therefore, looking at this liquidity discussion, it's important for us to have innovation from trading platforms. So also challenging the existing providers. Just take the fixed income market as an example. You have 3 trading platforms dominating fixed income: Bloomberg, MarketAxess, Tradeweb. They have market shares like 90% plus. Explicit cost over the last couple of years, and they were just going into one direction. It's a chart starting at the bottom left and ending right now at the top right. And that's for us one of the key roles when looking at blockchain technology. It's on the one hand bringing innovation among the trading platforms, and on the other hand challenging the existing providers to drive costs down, and again, not for the sake of technology, but for the benefit of our end investors. And then when looking at liquidity, tradable liquidity, market impact, the second component, via blockchain as a new technology, we can have going forward a much higher participation of retail, and I think that's also one of the key goals of new platform providers, to allow in an indirect way retail to participate, and this would add tradable liquidity where also we as an asset manager would benefit from. And therefore, to make a long story short, going forward, we will have more innovation, we will have higher efficiency, cost, explicit and implicit, will come down.
Real quick only, as we ran out of time. So at the moment, number one, 90% or 98% of all tokenized securities have to be traded OTC. And that's the problem about liquidity, full stop.
Right. That was good. We don't need the clock anymore. That does
So
not
I thought
mean
it was out.
So I think we have 7 or 8 minutes left. Yeah, until
Also, I can take longer answer. Okay, no.
you don't have to be that efficient. Huh?
No, so,
You can replace your dot by a comma.
no. So when we basically look at our business, so we have trying to connect the 4 different dots. One is kind of what are the different types of instrument. I touched on them, whether it's equity funds, and I think they will be interchangeable, as I see now already a lot of the tokenized money market funds replacing cash at the end. end of the day, or at least a surrogate. That is good, and this is where innovation will come in. Then we have like, what kind of sectors do we support? We decided that we don't support retail. I mean, that's a business decision. So we have basically broker dealers, but then we have institutionals as well. So not just on the OTC space, but there will be, as for instance, the pilot regime offers different opportunities also for issuers to participate. Now, the broker dealers may not like that, but all of a sudden you're competing with someone who actually has the supply. And the problem, what we're facing at the moment, is that if you're a market maker, and I used to trade in my previous life, so if you don't have access to the asset, you're not going to make a two-way price, in particular not if you want to have it instant settlement, because you're going to default if you don't have that. And that's another problem. How do you get there? There's no functioning repo market, which is, again, one of the problems, the current setup of securities. So although people kind of almost in the, and I sometimes see the tokenization space, they treat it like an electric car. Oh, I have a fantastic electric car with 0 emissions. Oh, I haven't thought about how I charge it. Oh, I haven't thought about this. Some of them build cars that fly 6 meters above the road. That's great for the one use case, but there are so many other interlinked things, whether it's repo, asset servicing, corporate actions, and a lot of these things have not yet been addressed because they're tedious. They're very difficult, but they are part of how capital markets work. They're part of how we can make things happen. And this is why it's not something where you can replace it from within 1 week. It is really, you try to challenge the next thing, and we need this inflection point. And I think this is really whether we have a new liquidity on the cash side, and that could trigger new solutions. And then all of the other things, smart contract-based add-on services will follow. Whether it's reporting, whether it's rebalancing, whether it's allocation on primary, on secondary, this will all come as the adoption of technologies there.
Right, thank you. So taking Christoph's example of the evolution of internet, we are a bit beyond the 14K bing, bing, bing modem, but we are way away from the 5G video streaming. Question is, what's in between? Where are we? Considering the last 6 minutes, I give you 2 options for answering. You could either zoom out and give your perception on what's happening outside of Germany, European global scale, or you can elaborate on what you think next year, sitting here, what will be the new topic we talk about, or will be exactly the same?
Will there be a meeting next year?
Presuming there will be one.
Joke. Okay. No, I think Outlook, 90. If you invite the same people, the same answers will come. But I think next year, the majority of the transaction, to the surprise of the people, will all be under English law. Basically, and the Luxembourg guys will have run everything with their transfer agent. In funds, in bonds, in equities, in private markets, everything. So go Luxembourg.
Any objections?
I would just could emphasize that because we are majority of our leads by now are definitely in Luxembourg. It's a sad thing, but it is the case, and the reason is quite easy because for established financial institutions, the legal requirements are definitely lower. Full stop, and even this is an entry barrier, and that's why they perhaps, and I don't hope so, because with the EWPG we have a brilliant legal framework even here in Germany, but nevertheless by now, if I would take my experience from the last months and proceed it to the future, I would say Luxembourg is in front for the next year, and I would fully agree with Michael that we see it in a comparable situation like that. Yeah.
So I would say we will meet again next year, and it will be the same topic, and I think that's a good thing. And what I see as there's a major change or shift that is happening right now, and I think that's geopolitical, and it's also sort of for Europe as a whole. I think we still don't really have harmonized European financial markets. They're still very much looking different, whether you look at a market in France and Italy and Germany. And I think also with the geopolitical situation of Europe, seemingly starting to get its act together, I think there will also be like further push on harmonization and sort of a level playing field inside financial markets in Europe. And there will also, I think, will be support politically to actually establish this. I think the next driver that we see is that crypto companies are growing up. They're now going to be MiCA regulated, and MiCA is it's a European regulation. So you sort of don't have local legislation that you need to address, but you need to directly follow the European regulation, and sort of there's also sort of a change how rules are set. And I think, you know, with this crypto companies then entering the next phase, for them the step to MiCAR isn't to MiFID isn't that far. So suddenly I think you have a bunch of new entrants who look at things differently, who have built the business differently, and who also look at securities trading differently. And I think that's, you know, with all of the effort that the established players are doing, and I very much respect it and I find it amazing what some of the traditional financial institutions have been doing in the tokenization space. I think there is finally some change coming, and I'm really looking forward to next year.
Predictions for next year. Point number one, Brussels will have it clear that digital capital markets union is key. So not only in defense, but also in the financial world, it's important that Europe creates a equal level playing field to the US, and that we don't leave the Americans in the lead in the financial industry. Point number two, looking at payment, we will have from the ECB wholesale central bank money, which went live. We will have a statement from the ECB that we have a repo facility for tokenized securities. And looking at the asset management industry, tokenized money market funds will be the go-to product, and we will see a decent amount of money market funds being live as a kind of connect, looking at on-chain activities between assets and cash on-chain.
Yeah, totally agree with Christoph. And adding on here, we have in Germany the electronic securities law, LWPG. We have been a first mover advantage. It's a very great law, which gives the clarity and investment security for all the financial institutions to dive into this topic. Now other countries are also introducing laws like the EWPG, like Luxembourg. And what's not happening is that all the Luxembourg companies will come to Germany. So I think I agree here that especially the fund industry who is now in Luxembourg will make use of the Luxembourg tokenization law. What I don't think is happening is that all the bond issuers from Germany will go to Luxembourg. They will stick to Germany. They will stick to the EWPG. They will now have a new way of issuing their products besides the traditional CSDs in a way more efficient way or with attracting new investors. And this is what's going to happen in the next year. We will see, especially for bonds and also money market funds in Germany, that we have the full value chain on a scalable level. We don't see the POCs anymore. We'll have a scalable infrastructure that these products can be issued in the same way and in the same size as now with traditional CSDs.
We just have 2 minutes left. Maybe one addition from my side. Guess what's also extremely important for us is point number one, collaboration, education, and then also standardization. And that's, I think, where we as an industry, where we have, as a financial industry as a whole, where we really have to come together and to work on standards. We will see in the network space, you have in the Americas Canton network, looking at technology itself, we have regulated layer 1 here in Germany. We have global layer 1 driven by MAS, Singapore. So collaboration in the industry will be really key. And looking specifically at the buy side, looking at you, Tim, looking at BVI, I guess what we've seen over the last couple of months, 3 to 6 months, that there's a much bigger interest from the asset management industry in our working group on tokenization and digital assets. I guess looking 1.5 year backwards, we have had maximum a handful of participants. Last Tuesday we've had our meeting with I think 20 plus participants. So definitely interest from asset managers as a whole is growing. And looking at you, Susan, looking at EFAMA, so to say the European format of what we have as a BVI here in Germany, European Asset Managers Association. You also started with a working group or task force, as you called it, where you got board approval. So interest definitely from an asset manager side is significantly picking up in this space.
All right, thank you very much. This is not a BVI membership campaigning. Unless you are a licensed Kapitalanlagegesellschaft, please come forward. Otherwise, I want to thank you, all the panelists, especially for this very active panel that makes it more fun, I think, for everybody, and also very convenient for the moderator as well. And yeah, so I believe we'll see each other again, maybe on the panel or at the pretzel stand. Depends how good performance is measured here at the Frankfurt School. And yeah, I think we're close to lunch break. So if you want to engage in discussions with the panelists, just, you know the names, come forward. Thank you very much.
Thanks, Tim.